Hi, Matt. Thanks for having me here. I'm Arturo Préstamo, Executive Chairman of Santacruz Silver. We're a multi-metal producer in Bolivia and in Mexico, and I'm very pleased to be here with you today.
Arturo, good to see you again. So, you've just put out the quarterly numbers for the first quarter of 2025. Do you want to run through the headline numbers, and then we'll sort of get into a conversation about what it's going to do for you?
Absolutely. We have revenues close to, north of $70 million on the quarter, an EBITDA of around $27 million, and all-in sustained cash cost has come down across most of our assets, especially the ones in Bolivia. So we're happy to see how things are evolving in our operations.
Well, it's been sort of transformatory kind of 12 months for you guys. I mean, I think one of the numbers we're looking at is sort of gross profit of up nearly 7,000%. So obviously getting into production, silver price doing a lot for you. So you must be pleased about the operational performance from the team.
Absolutely, Matt. Metal prices is helping us indeed, and also we have a few things that contribute to our gross margins. One has been the result of previous years' investments into our mines, which have improved our margins. Definitely the metal prices today, and also the exchange rate in Bolivia, where the exchange rate has suffered devaluation, and that is a chronicle thing happening in Bolivia. So that is something that will remain for many years to come. So that is something that we should expect to be in this range for the next coming years, no?
Right. Okay. And obviously, the cash position is building. The kind of free cash flow contribution is growing as well. But you are still sort of paying down this kind of Glencore consideration. When do you think you'll actually be able to pay that off and kind of move into a position where you don't have to worry about that anymore?
Sure. Well, so far we have paid $17.5 million. We still owe $22.5 million, and we're amortizing them as we announced back in March with $7.5 million by month. So we still have 3 payments to go, and we should finish and make our last payment the last week of October. Today, our treasury is strong. We have north of $60 million in our treasury. So, we have no concerns about meeting our objectives of getting these payments done on time.
Right. Okay. Now, obviously, the company is producing. It's growing. Its position. You're still investing, though. You're investing into the future. You've acquired more. Well, so you spent more on your kind of on capex position. Can you sort of talk about how you're sort of allocating this capital for kind of improving future production?
Yes, Matt. Well, this quarter we have been investing a significant amount of capex in our Mexican mine, especially through the acquisition of different underground equipment. No, we are preparing level 960, which is for us what we believe the future of this mine, so far, level 960 has been contributing into our throughput tonnage on a monthly basis for close to 40,000 tons out of 75,000 tons a month. And we'll keep improving our throughput from this mine, from this area, level 960. And for that, we need new underground equipment. So some of the last acquisitions arrived just in Q1, 3 big underground equipment, and that was what moved our all-in sustained cash cost due to this capex investment on the quarter. But from here on, we expect this to normalize, and you will see all-in sustained coming down to a more normalized level.
Sorry, if I can ask about the investments made at level 960, obviously the AISC is up at around 34, 32, as you said. How quickly do you think this investment will allow you to kind of drive those margins that you're seeing from level 960? When will you see the improvements starting to come through? And do you have a target number that you're aiming for?
Yes, Matt, definitely you will see improvements in Q2 and from here on for the rest of the year. Our objective here at at Simapan mine is to be in the neighborhood of $22, $23 all-in sustained cash cost per silver equivalent ounce. And we should be there relatively soon, I'll say in the Q4 this year at the latest.
And will that sort of come from improved efficiencies, or will it come from improved production and improved amounts of silver produced?
That'll come, Matt, from let's say from efficiencies. What happens right now is that most of the ore coming from level 960 is ore from development, and ore from development has a higher dilution, and also that is not, let's say, a stope or an area that you have prepared for production. So our objective is to have ore from stopes, fresh stopes that we are preparing as we speak by the end of this year. So at that moment, you will realize better all-in sustained cash cost.
Sorry, obviously Simapan's the AISC was at 34.32 in Q1, quite high. Why was that?
Right, that was at our Simapan mine in Mexico. Actually, this mine, Matt, has been coming through a significant amount of investment since a year and a half. We have bought more than 15 underground equipment. And last quarter, we received the 3 last pieces of equipment. This is what increased our all-in sustained cash cost for the quarter. It's a significant capex that we did, and it was needed to take this mine to the next level of production. So we expect to see all-in sustained cash cost to be normalized by Q2. And for the rest of the year. So
have you got a target number for that? I mean, what do you expect it to drop by? How much will it go
to? For the end of this year is at Simapan, and that's actually something that we'll start seeing on Q3. It's something around $23 all in for Simapan.
Okay, so that's the target. And what about the kind of silver production sort of decline? I mean, obviously this will have an effect on your ability to rebound and produce more in Q2, Q3, as you say. But is it just around the equipment there, or is it because you understand the ore body better? What else is contributing to this $23 number you're aiming for?
Well, actually, it's we have done the most important capex investment throughout the last year and a half. Now, level 960 at the Carrizal mine in Simapan is starting to deliver. As we speak, we're preparing new stopes, which so far no stope has contributed to the production yet. So all the ore has been coming from development. So as we keep advancing here, we're going to start seeing more ore coming from these stopes, and that has significantly less dilution, and it's a more, let's say, metallurgically a better ore to have improvement in your recoveries.
Right, and again, you saw sort of drop in silver, drop in zinc. Was this a kind of function of the mine sequencing, or entirely about this new equipment coming in and needing to kind of ramp up?
Well, actually, Matt, that's a good. I mean, overall, we actually decreased our production in Q1 when compared to Q4, and the main reason is it's a seasonal matter, no, and it's a seasonal matter more so in Bolivia. Our all-in production was it's always slower in Q1, and that's when you have carnivals and you have several celebrations going, which affect, of course, your production rates. But as we keep going throughout the year, things normalized, and definitely our stronger quarter is Q4, where you have the most production quarter.
And if I can just ask around the sort of San Lucas, it's one of your kind of highest producing segments. Have you got plans to expand that or optimize the ore sourcing model further?
Well, that's a good question. Actually, San Lucas, as you might recall, it's always a cushion for us in case you have a hiccup in one of your mines, San Lucas can come in and immediately deliver the ore needed so that your mills run at full capacity all year round. So San Lucas should be in the neighborhood of a 1.2 million ounces silver equivalent on a quarterly basis. And that's mainly because you don't have more milling capacity today, no? Your mines have been performing in line to budget, so San Lucas process its ore at your 3 different milling facilities, which today they are almost running at full capacity. So the idea with San Lucas is eventually to identify a milling facility which can be dedicated for San Lucas, and that will release milling capacity on your own mills today.
Okay, understood. Well, nice position to be in. What about the is it Sorakaya exploration asset?
Correct.
How do you anticipate sort of reaching a development decision on it?
Well, Sorakaya, what we've been doing over the last year is just small exploration activities, more so infill drilling, trying to allocate, metallurgically speaking, the best approach for that mine. We don't have plans this year to build that mine. Let's remember that this mine has a PEA that once it reaches full capacity of 800 tons per day, it should be producing close to 4 million ounces of pure silver. But this year, we're going to keep doing more exploration, more metallurgical works, and we'll be very disciplined with the management of our treasury and just making sure that we have another strong year in terms of our production and more so the profitability of the company. So
Right.
maybe next year we'll revisit Sorakaya and we'll see
Okay.
the best way to develop that mine.
Okay, and so and therefore, let me ask you, in terms of like Porco and Bolivar, you've got that kind of profit sharing model there. How does that affect your decision making or capital allocation between your fully owned assets and your kind of joint assets or shared assets?
That's a good question, Matt. And the agreement with Comibol, with the government of Bolivia, it's a net profit, technically a net profit agreement or a cash flow net agreement, no? In the sense that we do all the operations, we control absolutely all the decisions and the operations at both of the mines, and at the end of the year we share a profit after capex and taxes being paid. So technically our decisions are taken with the idea and that the operation is completely our responsibility as same as the administration. So those mines have the same, let's say, approach in terms of capex than Caballo Blanco, for example, which is 100% owned, or Simapan mine. So the approach is the same. We're responsible for those mines across all the different areas.
Okay, and what about Caballo Blanco and San Lucas groups? You've kind of done some reorganization there as well. Have you seen any kind of operational impact or efficiencies yet?
Yes, Matt. Actually, if we compare Caballo Blanco and San Lucas, we move out one of the mines from Caballo Blanco, the Reserva mine, and the reason for that is Caballo Blanco runs better. Let's say the silver improves significantly the recoveries or silver going to the lead when you run Colquechaquita and Tres Amigos mines together. The ore from those two mines blend nicely and recoveries are improved. When you put Reserva mine into that ore, you depress the silver coming to the lead content, or lead concentrate, sorry. So carving out Reserva mine and having Reserva running through San Lucas, where you have a lot of ore coming from small miners and different qualities of ore that allows you to blend your Reserva ore better, that has improved our profitability. And as you can see in the production tables, Caballo Blanco has reached pretty much the same production that it used to have when it was running 3 mines. Now with only 2 mines, you're technically at the same production rate as you were with the 3 of them. So this is a significant improvement, and more silver reporting now to the lead concentrate, which help us significantly in terms of the economics.
Okay, and so I guess with something like that, when you've done that, will we sort of see that as a kind of quarterly guidance number, or will you be putting out like new NI 43-101s for these? As an operator, maybe you've got a little bit more, and a cash generator, you've got a little bit more sway in terms of how you come at this, but how will you report it, the efficiencies?
Right. Well, we haven't given guidance yet in terms of our production for the year, but technically we'll be producing relatively the same amount of ounces as last year, close to 19 million ounces silver equivalent. And our all-in sustained cash cost should be in the neighborhood of $22-23 across all of our assets, no? I mean, in average. So that'll be, I mean, if you allow me to put it this way, but a rule of thumb of how our production will look for the rest of the year.
Right. Okay. And just coming back to that kind of exploration component at all of the sites, do you think you're going to be able to kind of move that again to generic life of mine for each of these? Because you've come in and sort of fixed something, and you've kind of got it up and running. You've kind of cleaning up the balance sheet, and now I think people will be looking for you to extend the opportunity at each of the projects.
Right.
When do you start getting focused on that?
That's a good question, Matt. Actually, we have a premise here in the company, and the geology department should always inventory at least 1.5 times the amount of ore that the mines are depleting. No, so that ratio, it's always a ratio that we follow closely, and actually the conversion rate has been very successful over the years. So we're very positive that we'll graduate our inferred resources as we keep moving forward. So we believe our mines across all of our assets will keep running for many years to come.
Okay.
And we'll be updating our resources every year.
Okay, on an annualized basis. Okay, and obviously, given the kind of the mix of the metals, how's your, in terms of reporting it on a silver basis, how's that evolving and changing? Because silver price has seen a nice little spurt recently. Zinc is, doing what zinc does. How does that affect your ability to report on it in terms of like guidance?
In terms of revenues, today your revenues around 48, close to 50% of your revenues come directly from silver. No, the rest is zinc, of course, most important, and then you have some copper. So we expect that for the rest of the year will remain in that range.
Okay, interesting. And now, obviously, and we've talked about your ability to kind of to do this turnaround, which has been superb. M&A. Every company talks a good M&A story, but are you ready for that anytime soon?
This year, Matt, that's a good question. Actually, more so as we're building a very strong treasury every week, and today with a very strong treasury and a strong balance sheet now, and having this Glencore payment very under control, let's say. This year will be focused only on the efficiency of our mines, on building a stronger treasury. We want to end up the year with a very strong treasury, even after paying Glencore on the last week of October. So this year, we're just focused on our producing assets.
Good. Finally, an honest CEO. Focus on the money for now. Just on all things, and I think continues to be such a big topic, and that's kind of social license. You spent quite a bit of money in 2024 on that, making sure that you did have social license to operate. Will we see a continuation of that now, or was that just kind of like a one-off cost?
No. That's something that we definitely believe that we should contribute to those communities where we have operations going, and it's important to make a significant contribution to the families and to the communities to improve their wealth and their life. We invest in schools, we invest in teachers to have a better mentors at schools, and we focus a lot in the children of those communities, and we'll keep doing that. I mean, from always, no? So no, we expect always to be in that range of $4 million of investment through the different communities. We brought clean water to a community in Mexico. We have different and very important, let's say, value-added contributions to the communities. So we believe in those investments, and we'll keep doing them as we keep going.
Okay, and just I've got to talk about federal involvement in both Bolivia and Mexico. Obviously, Mexico, we've seen Sheinbaum has been in power for a while now. Are some of her promises starting to actually manifest themselves? Are they helping the mining communities again? Are they helping foreign direct investment?
Well, I think Mexico is a solid jurisdiction, and we haven't found any challenges to run our Simapan mine. The community is very pro-business and very positive to support this kind of activities and economic growth. We're big contributors for the Simapan district, economically speaking. So no, we're very happy, and we have felt that the government, local and federal government, have been supportive of our initiatives and our operations. Indeed.
Brilliant. Okay. Well, look, I'll tell you, it was just a kind of quick catch up on the quarterly, which, I think since we last saw you in December, you're up over, you've gone from like 30 cents to over 50 cents. I think people starting to take note of the cash that you're generating, and that operations are running as you hope they would. So stay in touch with us. Let us know how you get on. It's been great to speak to you. Thank you.
Matt. Thanks for having me here. Thank you so much.